Let me explain what the corporate veil is. It is the shield from liability that the business owners of an entity are given. And by an entity, I mean a corporation. When you create a corporation, going all the way back to England, that becomes a legal entity under the laws of our government. And it can buy property, it can sell property, it can transfer assets, it can create goods and services, make payroll, etc. And pay its taxes. That's critical. So that is called the corporate veil because it gives the individual owners a shield from personal liability for the business transactions that are honest and in good faith that sometimes go awry. So in other words, it shields your personal assets, the assets of the individual owners, from the liabilities of the company should something happen. And then here's an example. Tornado went through Rowlett a few years ago. Let's say it destroyed your business. Your business was unable to perform because all your inventory and your tools were sucked up in the tornado. And you have only your insurance policy to look to make your customers whole because you cannot provide their goods back and you cannot complete the services for which they hired you for. That's an example of where corporate veil would give you some shield from liability. Keep your personal assets safe. Now, obviously, you want to keep your personal assets safe by maintaining the corporate structure. And there's critical ways you have to do that in the state of Texas. The Texas Comptroller wants to hear from every company every May of every year by filing their annual reports. They're not difficult, but it's something that some folks tend to forget. So remember to calendar that, or get with your attorney who helped you incorporate your corporation or your CPA, or just get it on your calendar, and just a reminder that you need to be filing reports with the comptroller on an annual basis, because otherwise the comptroller come June or July of every year, whoever has not filed their corporate governing reports, and there's a couple of them and I'll get into that, but the Texas Comptroller will let the Secretary of State know failure to file reports, suspend this corporate entity, and then you are outside of the corporate shield. You have lost your corporate charter, and that goes for LLCs, partnerships, what have you. Every one of these entities has to file reports annually with the Texas Comptroller to stay in the Comptroller's good graces and stay behind that corporate veil, that corporate shield. So you need to remember every May, calendar it every May, to follow up with your CPA, the lawyer who incorporated your entity, or just put it on your own calendar and make sure you are responding to the comptroller on an annual basis about what the necessities in those annual reports. And it's a franchise tax report, it's a public information report identifying any changes in the membership of the corporate entity, and then if don't fall within the franchise tax report, it's just a no tax due report. And the tax ceiling is quite high for the comptroller. Texas is open for business, and while large earning corporate entities do pay a significant franchise tax to the state of Texas, most of your small business owners are going to fall well below that franchise tax threshold, and many of you will be filing. And what I mean by that is that for the most part, the majority of small business owners in the state of Texas will be filing a no tax due report, but it's critical to file it because the comptroller, like I said, will report to the Secretary of State to suspend your corporate charter. And then, just like that, no corporate veil.